Good afternoon, everyone. Jason here. Today is August 17th, and this is your aftermarket update. All right, so we had a good day here at the Oil Trading Group. In fact, we've had a really nice week. We've not had a losing day this week. And while that by itself is cool, it is even more pronounced in a good way, given the fact that we are in contract rollover week. Today was the last day that we'll be trading the September contract, as we will move tomorrow into the October contract. That is an important understanding, or an important note to understand, because contract rollover weeks can be challenging at times, right? The markets can be choppy and a little bit indecisive and those kinds of things. And we had some of that going on today as we were looking to get started. In fact, we got shaken out of a trade, what ends up being our trade of the day here, on a stop run, and I'll show you that here in just a few minutes. So we were one trade and done today. The primary reason that we finished up early is we did end up with 40 ticks on the day, and we are in the middle of contract rollover, and we want to make sure that we get out of this in a good way, and that's what we did today. So let's talk about the entry here today. We have what we call our market maker levels. They are the dynamic support resistance levels that we really key in on here. They are the emphasis for our targets and our ideas for getting into and looking for targets based upon these levels. So today, the market came down in here into the daily structure signal. We had a previous low before the open at 56, and then we were slow walking the low down here. And once we got down here to this 46 today, we talked about the fact that if we could not get deeper in the way that these market maker levels work, and there were a number of other factors. I'm just kind of giving you the high level overview. But if you look here at this daily structure signal, we talk specifically about kick the signal and pay the target. If we don't kick this signal underneath, if we kick the signal and don't pay the target underneath, then you're looking to pay the structure target up above you, and that is exactly what we were looking for today. So as the market opened up and we continued to not be able to push down through the low, and you could see that we had 1, 2, 3 attempts to make a new low, and what we could see on the order book is that the liquidity and that the buyers are really beginning to assert themselves in this particular area, and we looked to get long right over the top of this daily structure signal here at 46.56. That's the actual entry that we were looking for. And when you hear the video, or you watch the video rather, here in a few minutes, you're going to hear me talk about the high at the target being one tick below the high up here at 94. We rallied from 56 up to 94, pulled back, and then made a little bit of a weaker high. And it was right here that we got shaken out on a quick stop run. We came right down to our daily structure signal. Obviously, we got in at 56. This came down to 55. And then almost immediately in the next 12 minutes, we went straight up to take out the daily structure target up there at 47.09. So what we had talked about in the room, and the reason that I moved this back, I said that, you look, if the market were to get really aggressive, we would be taking this target back from 94, which is what you hear me say in the video. We would be looking, depending on the speed of the tape, to see if it got up to 47.06. We were looking for 50 ticks, and then eventually we said, it could reach out all the way up to 47.26. It was right here, though, on this bar that we got shaken out. So you're going to see me get taken out at 2 ticks below settlement. So it ended up being a 20-tick trade times 2 lots, or 40 ticks. And then the market, of course, after shaking me out here, rallies up into the daily structure target. And again, we were talking about holding on for 26, and the market got really close up there today. In fact, it got to within 7 ticks of what we decided was going to be the final target on the day. So, this is one of those days where we were right, but we weren't able to fully maximize it based on a little bit of bad luck. So that's the bad news. The good news is market maker levels working in concert with the way that we are looking at the book, the order flow, and various other techniques that we teach you here at the Oil Trading Group. So again, can't give you all of the details in this short video, but what I can do is talk to you about the way that these market maker levels performed, and then I can show you the actual trade that we took in front of a live trading audience today. So having said that, I'm going to let you watch this OTG trade of the day. The 869. I'm in at 56 now. Stop is 45. Target is 94, one tick below the high. 94 is your target, one tick below the high. Okay, so the high of the day on the CL ends up being 47.19. That's 7 ticks away from what we said our final target was. Had we not been shaken out on that one pullback, it could have been a better day. But again, it's been a really good week considering that we are in the middle of contract rollover. Tomorrow we should be, like I said before, on the October contract, and we should be through contract rollover week by the time we start Monday of next week. So that will be a good thing, and we'll be back to normal market conditions, or as normal as they can be. And hopefully we could continue this winning streak into tomorrow and into next week. So as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.